Hello and welcome to Dialogue. China has concluded its twice-a-decade National Financial Work Conference that assesses the current status of the country's financial sector and sets priorities for financial work for the next 5 years. This is the 6th edition of the meeting since 1997, and each of the past meetings have focused on different issues and tasks reflecting challenges facing China's financial system. What are the highlights of the meeting, and what is the status report of China's financial sector, and what are its predictions for growth of the Chinese economy in the short, medium, and the long terms? To discuss these issues and more, I'm joined by Professor Liu Baocheng from the University of International Business and Economics, Mr. Chen Jiahe, Chief Investment Officer at Novem Arcae Technologies, and Dr. William Li, Chief Economist at Milken Institute. That's our topic. I'm Xu Qinduo. Welcome to Dialogue. Baocheng, I will start with you. So different financial work conferences, have different challenges, different tasks. So what are the highlights of this most recent one?
Well, this is considered to be a very critical juncture where the Chinese economy is still in a uphill battle, where we are heading to around 5% growth rate. At the same time, we can see that there are some noises in the financial market in terms of the massive real estate development problem, and that is really involving also the banks and also the debt ratio in some of the local governments is also mounting. So therefore, it is really time to adjust on biennial basis of the policy directions, and this policy direction is there to provide a healthy environment. First of all, to consolidate the regulatory environment for all the financial sectors, be it stock exchange, security exchange, and banking and insurance, etc. And the other is to channel more of the liquidity to the development of the real economy, and then to further open the Chinese market for the participation of global financial market. So lastly, it's really there to reiterate the importance of Shanghai and Hong Kong as the financial hub to shore up the Chinese economy for the next phase of high quality growth.
Mm-hmm. Jiahe, what do you make of the overall tone and policy priorities set at the conference?
Well, we have seen many things. The conference says a lot of things, but there are, a few things that really impressed me. The first thing is that this financial conference has said, financial market is super important to the economy, to the country. So this is a very strong emphasis towards the financial market, which many financial institutions has actually felt that. So we are becoming much more confident about the market. The government started saying that this financial market is so important to the real economy. So this is really a kind of stimulation to the market. The second is that this conference has been emphasized on sorting out the risk that is possibly coming out in many areas, such as it has mentioned real estate, stock market, fixed income, foreign exchange, all these kind of things. So this is something that assure you that not a large risk will possibly come out, because if you look at financial market, we never seen financial market in the world that has no risk at all. The problem is that in many cases, people didn't realize that there is coming to be a risk. So everybody is happy. Like, for example, in 2007, everyone is so happy with derivatives. And then later on, the derivatives got into a big problem. So the good thing is that the government started to recognizing there would be possible risks in so many areas, starting to make plans for them. So in that case, you won't have serious problems.
Mm-hmm. William, so what are the issues that you are following closely?
Well, I think the near-term issues that's facing China are also the ones that the conference addressed, which is what's happening in local government financing and the property market. The property market has been at the heart of the drag that's on the Chinese economy in the near term. And going forward is also one of the vulnerabilities about fiscal policy in China. Right now, local governments are very restrained in being able to do fiscal policy, and the conference looks like it's trying to address ways to improve the financing of local governments in a way that allow fiscal policy to come back into use again. And more importantly, I think I echo my colleagues in saying that the purpose of the financial markets is really to serve the real economy. That's true globally, and even more so in China. China's financial markets are still relatively young. It's very bank-based, and because it's bank-based, there's not a lot of transparency, and we depend on the supervisors and regulators to provide the kind of supervision and regulation and framework that will allow the banks to behave in a way that is doing the job of pushing money and capital into the places where it's needed most.
Mm-hmm. Well, Baocheng, as many of you have mentioned about the real economy, the purpose of the financing market is for the real economy. I mean, China has been stressing that for a long time. Why the stress on that? Serving the real economy? Is it to prevent potential risks, or is it to simply for the growth of the economy?
Well, China over the years has been in a very active restructuring of its economic portfolio, where there has been some strays. I really witness is that we seem to be too much involved in the financial transactions. It's money creating money, and with more derivative developed, where the manufacturer is sidelined, and particularly when China is looking more seriously with regard to food security in the agriculture area. And also it goes for the heavy manufacturer, because we are going for high quality growth, and we need to strengthen our role as the big manufacturing hub in the global supply chain. And in the meantime, we also need to introduce more of the modern technologies like digitization into the manufacturing sector. And the fact that over this year, the PMI, particularly pointing to manufacture, is not very promising. So actually, the recent release 1 day ago is that we also dipped into the contraction stage. So therefore, I think the central government have taken full notice of that to really to support the real economy. It can really, on one hand, prevent the financial bubbles. On the other, it really shows up the strengthening of the Chinese economy, because that's also the focus, strengthening the nation by the work conference through the financial management is really the key. And therefore, it is really the right time. We need to go forward with this new mission.
Mm-hmm. Well, if you look at the details of the conference, Jiahe, the meeting urged more financial resources that should be leveraged to support scientific and tech innovations, and for advanced manufacturing, green development, small and medium-sized enterprises, and innovation-driven development strategies, etc. So can we say the priorities is all about, I mean, it's very clear if you look at the messages about the priorities of the Chinese economic growth, more probably cash or liquidity for the small and medium-sized companies, and more for innovation and more for tech development?
Yeah, that's right. I mean, this story has to be understood when we look at the whole picture of the Chinese economic growth in the past few decades. Previously China were heavily emphasizing on things like real estate, export, large manufacturing, infrastructure building, all these kind of things. And these kind of so-called heavy industries has actually supported China's astonishing economic growth in the past 4 decades. China grew from somewhere around just a few hundred USD per capita to currently the per capita GDP is about 13,000 USD per capita. So that's a very large increase. But the thing is that we can't keep on going on that route forever. ever, because currently China is already the world's largest exporter. China produces about half of the world's steel and about 60% of the cement, all these kind of things. So we have to change in the future if China wants to go to a higher level. As all these areas that you mentioned, green economy, high tech, new medicine, private economy, consumption economy, all these kind of things. So it is very clear that the central government has actually realized all these kind of things and is directing the financial system to support economic growth in all these areas. So this is actually a sustainable growth if we look for the next 2 or 3 decades.
Well, William, you mentioned about several of you has mentioned about the real estate sector. I mean, we know that the challenges over there, some of the biggest companies are facing these financial constraints there. And now, interestingly, on the housing market, the meeting urged to improve supervision, but at the same time, to meet the reasonable financing needs of real estate enterprises of basically without discrimination. So what's the message here? Can we say, probably there will be a relief for some of the companies there?
Well, the key message that really has to come out, and I'm not sure it has, is that the vulnerability in the real estate sector is one of leverage, that too much debt has been used in the production of housing. And how do we get out of that problem? The banks are highly leveraged. The people themselves are highly leveraged in the sense that they have huge mortgages for property that hasn't even been built yet. So I think the key is to find a way to lower the amount of leverage without killing the sector itself. And that's going to be a very big challenge for the policymakers. And I would also say that one reason why perhaps China has gotten into such a difficulty is that a lot of the lending was done by banks, and the banks were in a way encouraged to do this. And I think one of the things that we all talked about is the need for redirecting capital, redirecting it away from over investments in the property market toward the high-tech industries and high-value added industries like artificial intelligence and digitalization that we just mentioned. So how do you do that? Well, you let market forces in the West is how we do it. And I think in China, what I would like to hear more of is how the implementation of the next 5-year plan is going to allow more market forces to direct the flow of capital. And I think that's a message that I think has to be emphasized.
Jiahe, do you agree with William here? Probably we should let the market decide. Some of the companies probably will have to fall, and then to create more robust or more competitive entities there.
Yeah, that's the thing. China has actually saying that the market economy is definitely the key point for economic growth in the past few decades. People make their decisions, work their work, and some of the companies do fail. If you have a market economy, everyone survives and no one is cleared out, and everybody's happy. That's not the case. People are not going to work hard in that case. So yeah, as it's just been said, some of the companies are getting out of the game, and the people who made the wrong decision, either because they are not working hard enough, or they make the wrong business decision, or they put too much leverage on their balance sheets, like some of the real estate developer has been doing in the past few decades. And now they meet the problem when the market is coming down. So all these kind of things, a kind of failure rate is the sign of a healthy market economy.
How this is let's say, some of the reasonable demand will be met through the financial means. Baocheng, does that mean, the government is going to bail out some of the too big to fail companies here in the real sector?
Well, I think that's a very tough question, because the biggest companies are populated by the state-owned firms. Of course, they play a pillar role to shore up the Chinese economy, and they are too important to fail, in addition to being too big to fail. And together also with the state-owned banks. And I see that there has been a poor picture of their profit rate over the past 3 quarters. And now the government is not really there to bail them out with the right finance, but more of the policy support. For example, by having them to have more the professional operation, and also by warning of the risk that's involved, and together with the heavy-handed anti-graft campaign to get rid of those the cockroaches within this industry, and because they involve too much of the finance that can really produce an earthquake in some of the sectors. So right now we can see that some of the big sharks are being prosecuted, and on the other hand, how we can really provide a more of a healthy environment through fair competition. You have been talking about innovation. Actually, if you talk with the P2P people, with many of those, who are engaged in the micromanagement, they all talk about innovation, but innovation has been used more as a disguise for their conspiracies within the financial market. So therefore, instead of, allow them to fool people around, and the government now is tightening its oversight on one hand, and from the entry into the market to the entire process of operation, and on the other, the government is there, particularly from this conference, that is there to support the people and companies who operate on accountable and sustainable basis, so that the money can be used more effectively to support the economic development and also high quality growth. So hopefully that can be translated into real operation at different level, and particularly at the local level, and also at the major players level, like the stock exchange and also security market.
Well, aside from this, market entities, the players, Jiahe, there, of course, the another issue is really also, from the local governments, that's local debts. We know there has been mounting challenges, for local governments. So are we seeing a new way forward here from the conference?
Well, I would say the local government debt is something everyone knows right now. The central government knows it, the local government knows it, the financial participants knows it. So it's a problem that everyone knows it's a problem. The good thing is that it's an internal debt. So internal debt, if you look at the global financial history, internal debt, a debt in its own printing currency is never a large challenge to any government, because we can always, the money is under the printing of the central government. So that's not always a problem. The problem is that if you have a country having a very large amount of external debt, for example, when you go to the 1997 Asian financial crisis, the countries like Thailand, Malaysia, they got broken down because they borrowed too much US dollar and they don't print this money. So that's a problem that came out. And currently, China really has enough resources to deal with this local government debt. We have done the calculation about how much money is there. We estimated around about somewhere 3 to 6 trillion, which is it's a pretty large number if you look at the absolute amount. But if you look at how much money Chinese government and the GDP is actually making every year, it's a relatively small number. So I would say this problem, as we have actually noticed it, it will be able to be sorted out in the next few years with a gradual process. I mean, all the central governments, the local governments, the financial institutions, we have to work together on this. But it's not a problem that will not be sorted out.
Mm-hmm.
Well, for that, I
Go ahead, Baocheng.
disagree on 2 points. One is that some of the monies are really collected in some of the private hands, and there has been massive capital flight out of China. So therefore, they are not really being used or being hidden in somewhere in China. In one day, it's going to relieve the liquidity, enhance productivity. And on the other is that whether those investments by this debt is being used more effectively to support even a longer term delivery or return on investment. So that's another question. I see that some of the local government investment is now a waste. We can see that over the last few months, they bomb a number of buildings that are there, being before they are finished. So therefore, the waste and also capital flight is adding the salt into the wound.
Mm-hmm. Well, William, based on the Chinese experience, I mean, this is not the first time the Chinese government, faces challenges, financially from the local debt issue. Do you see a clear way forward for the Chinese government here?
Well, it's not just China, but around the world, we have had institutions that have been gotten into trouble because they made bad loans, or the asset value backing the debt is much less than what people thought. And one solution is to have the good bank, bad bank solution, which is to push all of the bad debt into holders, whether it's a company that's owned by the government or jointly owned with the private sector, and mark that market down, mark the debt down, so that we can clean up the balance sheets of everybody else to be able to allow these institutions to do proper financing. One of the things I think that we have to be careful about is that capital flight in China results because people feel that the money is not being used efficiently in China, and they're looking for better rates of return elsewhere. Now, if China can demonstrate that there are higher value investments and high return investments within China, and everyone knows the sectors that those are located in, whether it's electric vehicles or quantum computing or artificial intelligence, how do we get the money there? How do we free up the resources to be able to get that? And that requires some resolution of this outstanding debt problem. And a lot of it has come from the local governments, but so much of it is hidden inside the banks. So reforming the banking system is really key to improving China's future.
Mm-hmm. Well, if you look at the other important issues here, the World Conference also stressed that, a prudent monetary policy should be maintained. People say that means China will not engage in excessive monetary supply. Baocheng, of course, when we talked about that inside China, people thought of this 4 trillion yuan package to save the economy around the 2008-2009 financial crisis there. So are we too cautious or, to engage any kind of, excessive package to save the economy? Or how about, how efficient is the practice of, targeted, let's say, money supply to the different sectors here?
Yeah, you mentioned about the 4 trillion packages. That really helped China to avert the risk of the financial contagion in the financial crisis. Twice, actually, from the Asian financial crisis in 1977 and then the global financial crisis in 2008. But in the same time, we also accumulate problems. There has been excessive capacity with the wrong investment, because they are only considering the capacity, the scale up, without really taking full consideration of the demand and also the market changes. And so there are lessons to be learned. And on the other hand, this World Conference also make another great point that people first. So in terms of people first, the government will have to take care as a priority the inflation rate, because people, you and me, do feel some of the prices are really getting up, but we need to maintain our inflation rate around 3% without really high hikes, so that people will feel more confident in the expanding their purchase power. And on the other is that, we are not really, from at least what I personally see, we are not really short of liquidity, but its money is really non-performing. A big chunk of the money is not really performing. So that's why the government really make great emphasis that it needs to be channeled to productivity, not only to the real economy, but also to the service sector and to R&D, etc. So instead of, you lend to me, I lend to the other, all of us are really, increasing the GDP on nominal basis, but without really turning into real product and without really turning into real competitive edge for the Chinese export. So that's something that we really worry about. And that's why I really congratulate this conference, is really streamlining, the management over this so that money can be used more effectively.
Jiahe, I mean, of course, given all these efforts to tackle the challenges and also the plans for the next 5 years, it's, the ultimate goal is about the economic growth or stable growth in the long term. We know that the country has a target of 5% economic expansion for the year 2023. So where are we now? Are we going to achieve that target?
Well, it looks like to us 5% is probably very possible to be able to be achieved. Actually, at the beginning of the year, we thought there might be somewhere between 5.8 or 6%, but later on, it looks like the economic recovery is, partly, compared to what we have expecting. Well, actually, we thought 6% is not hard to achieve, but now it looks like the economic growth rate has been slightly lagging behind that expectation, and that's mainly because the real estate market has been pulling the economic growth backward, and that's a very that's an action adopted by China's central government. That is, we have realized that the property bubble is actually pretty large, so we don't want the property price to keep on going. So when you have a stalling property price, and in some cities has been dropping by like 5 or 10%, that means the whole property market is not growing that quick. So when we look at the economic data this year, we have saw a lot of negative data only from the property sector. But if you take away the property sector, look at other things like consumption, tourism, restaurants, investment, high-tech growth, medical growth, all these kind of things has been growing. Even the electricity used has been growing. I think it's about 6 or 7%. So you can see that every economic sector besides the real estate has been pretty healthy. And that's the reason why we can still see 5% GDP growth rate when we have a sluggish real estate market, which is very impossible if you look at many other economic histories in the world. I mean, look at 2008, when the real estate market in the United States actually came down, you see the GDP growth rate dropped to a negative territory. So that's basically because China is so large an economy, and with a very strong potential. That's the reason behind the fact that when its real estate market is not performing very good, its GDP can still be somewhere around 5%.
Well, I do not really see much of the uncertainty to achieve 5% because over the last 3 quarters, we already achieved 5.2, and now there are 2 months left. So if you look at the PMI and also the PPI, they all support the fulfillment of this target. But it's that's being said, is that how the money can really be made more effectively to support, as we discussed, the high quality growth, and the other is that how the private sectors can be given more confidence, because so right now we see that over the last 3 quarters, more of the investment are handled through the state-owned enterprises and also the central and the local government to build a new infrastructure projects. Yes. So therefore, if the private sector is there to get more robust, we can see more deliverables over the end of the year.
So William, last words, less than 1 minute too. So uneven, but with a potential?
Unfortunately, China's growth momentum has been going down. I agree that hitting 5% might be feasible, but the quality of growth and the composition of growth is not where the central government wants it. We want more sectors, private consumption. We want more service sector, and that is just not there because people are just not willing to spend. And I think going forward, we need the fixes that are being proposed by this committee put in place quickly to really preserve China's growth momentum going forward.
Well, on that note, we come to the end of today's discussion. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.